Stop believing Tesla's $1.2 trillion valuation is justified by robots. Seriously. If you think Optimus is already working in factories and delivering value, you need to hear the truth. Here is the counterintuitive truth that every Tesla investor needs to understand: $1 trillion of Tesla's valuation has nothing to do with cars. The automotive business is worth maybe $300 billion at best. The rest, a bet on robotaxis and Optimus robots. But here's the problem: robotaxi is behind schedule. Waymo is already ahead. January 2026, 0 Optimus robots doing useful work inside Tesla's own factories. 2025, Musk said Tesla would build 10,000 Optimus units that year. Didn't happen. Meanwhile, Figure-Eyes robots have logged over 1,250 hours on a BMW assembly line, handling 90,000 plus parts with 5mm precision. Unitree shipped more than 5,500 humanoid units in 2025 alone, 38% of the global market, starting at $16,000. Let me break down the $1 trillion bet. And stay until the end for the 3 secrets that will change how you view Tesla's valuation. I'll admit something: I saw Tesla's $1.2 trillion valuation and assumed Optimus must be working. They're building robots in factories. That's huge, I thought. Then I read the actual reports. 0 robots doing useful work. Production halted multiple times. Missed targets. Competitors already deployed. Today, I'm going to break down the $1 trillion robot bet. By the end, you will understand why this is high risk, high reward, and why the stock is priced for perfection. Let's start with the math. Tesla's market cap is roughly $1.2 trillion. The automotive business is shrinking. 2025 revenue was $94.8 billion, down 3%, Tesla's first annual revenue decline ever. Auto revenue fell 10% to $69.5 billion. The valuation breakdown: even giving Tesla a generous 3 times multiple, well above most car companies, the automotive business is worth under $300 billion. That means close to $1 trillion of Tesla's valuation is a bet on robotaxis and Optimus. Musk's own words: the robot could eventually be worth more than the rest of Tesla combined, since the market for physical labor is larger than transportation. The counterintuitive truth: Tesla is valued like an AI robotics company that happens to make cars. If Optimus and robotaxis fail, the stock is worth a fraction of its current price. Now let me show you Optimus's real progress. The missed target: in 2025, Elon Musk projected Tesla would build as many as 10,000 Optimus units that year. It didn't happen. Reports indicate Tesla only procured parts for about 1,200 units and manufactured close to 1,000 before manufacturing halted. January 2026, Musk admitted that 0 Optimus robots were doing useful work inside Tesla's own factories. The current plan: low-volume production starting at Fremont this summer in late July or August 2026. Musk's warning: the ramp rate is agonizingly slow, and literally impossible to predict, given the robot has roughly 10,000 unique parts on an entirely new assembly line. The counterintuitive truth: Tesla is years behind their own timeline. And Musk is now admitting it. Now let me show you the competition. Figure AI. Figure's robots worked an active BMW assembly line in Spartanburg for close to a year. They logged over 1,250 hours, handled 90,000 plus parts, and placed components into welding fixtures with 5mm precision in under 2 seconds. That's an audited proof point of a humanoid doing precision factory work at sustained volume. Agility Robotics Digit. Under a standing deal with logistics company GXO, Digit had passed 100,000 successful warehouse cycles by early 2026. Unitree shipped more than 5,500 humanoid units in 2025 alone, about 38% of the global market, starting near $16,000. The counterintuitive truth: while Tesla was promising robots, competitors were deploying them. Tesla has 0 robots doing useful work. Figure, Agility, and Unitree have thousands. Now let me explain why humanoid robots are so hard. Challenge 1. Dexterous hands. The hardest unsolved problem in the industry. Packing dozens of precise actuators into a human-sized hand that can withstand years of factory use is far harder than building a single-purpose robotic arm. Challenge 2. Battery weight. Battery weight sits high in the body and works against balance for every company building a bipedal robot. Walking reliably on a cluttered factory floor is very different from walking smoothly in a controlled demo. Challenge 3. Unexpected situations. Robots must handle unexpected situations without constant human supervision. Challenge 4. Durability and economics. Even if the technology works, durability, maintenance costs, and overall economics must improve before humanoids can be deployed at scale. The counterintuitive truth: these challenges are not unique to Tesla. Every humanoid robotics company is wrestling with the same engineering constraints. The difference: most competitors are private startups. Tesla carries a $1.2 trillion valuation. The bar for success is much higher when so much future progress is already reflected in the stock price. Let me leave you with the 3 secrets that connect everything we just discussed. Secret 1. The zero robot reality. Tesla's Optimus story is 90% promise, 10% progress. Zero robots doing useful work. Missed 10,000 unit target. Production halts. Competitors like Figure, Agility, and Unitree have already deployed at scale. Secret 2. The valuation gap trap. $1 trillion of Tesla's valuation is a bet on robots and robotaxis. If Optimus fails to deliver, that $1 trillion evaporates. The stock is priced for perfection, not reality. Secret 3. The competition catch-up window. Tesla has advantages: vertical integration, manufacturing scale, custom chips, FSD experience. But those advantages only matter if they translate to robots. Right now, Tesla is behind, not ahead. So what should you actually do with this information? If you own Tesla stock, the Optimus story is not delivering yet. Zero useful robots, missed targets, agonizingly slow ramp. But Tesla has real advantages: vertical integration, custom chips, manufacturing scale. If Optimus starts doing useful work in 2027 to 2028, the upside is massive. But the stock is pricing success before it happens. If you are a robotics investor, Figure, Agility, and Unitree are ahead of Tesla. If you want exposure to robots, not hype, look at companies already deployed. If you are a skeptic, Tesla's valuation is a bet on a future that hasn't arrived. Musk has a history of aggressive timelines that slip significantly. This is a high-risk, high-reward play, with the risk currently outweighing the reward. Here is my question for you. Do you think Optimus will actually start doing useful factory work in 2026, or is Tesla years behind the competition? Drop your answer in the comments. I read every single one. Like and subscribe if you want more analysis on Tesla, Optimus, and the companies reshaping the robotics industry. I'll see you in the next video.